Hello guys, I welcome you in this video. Today I'm going to be taking you through the process that you need to follow before you open a trade. So the first thing is to identify the market direction. We know that the market can either be moving in an uptrend, in a range, or in a downtrend. So you tell by observing the highs and the lows of the market. In our example here, we can see that the highs and the lows, they become lower and lower, meaning that the market is moving in a downtrend. But in an uptrend, obviously, the highs and the lows will become higher and higher. So once you identify the trend, meaning this is the right time for you to draw your trend line. So once you identify your trend, then connect your highs or your lows to really see how the market is flowing. And the reason you identify a trend is so that we don't go against trend, because in whatever decision that we want to make, we have to make sure that we flow with the trend. So once you draw your trend line, then the next step is to identify the key level. Where is the price closer to? Is it closer to the support or the resistance? So here we have to identify our most recent level. So here we have our support and then we have our resistance all the way there. So we can see that the price has already confirmed our support and now it is heading towards, or it is closer to our resistance, meaning we are likely to see the market going down anytime from now, not only because of the trend line, but because it has already bounced from a support, or it has already formed a support, meaning this wave is now a corrective wave, which is something that we are interested into. This leads me to the next point, that you have to make sure that you identify the pattern that is inside the corrective wave. But to obviously identify the pattern or the structure in the corrective wave, you have to go to a time frame that is a little bit lower than your higher time frame. So I will just go to the 4 hour. And if you can see on the 4 hour, our role it is to analyze this corrective wave which is heading up. Let me just remove some of the drawings for clarity. So our role it is to analyze this structure, and then we have to wait for our breakout, and then from the breakout, that's where we're gonna execute our trade. Obviously, you can add an extra layer of confirmation, but here we can observe that the corrective wave started on its initial flow heading up, and then the flow changed to be a little bit more aggressive. As you can see, there was a switch, meaning as a trader, you have to make sure that you adjust your analysis. So we can see that we have a shift, and on the upper side, we can see that the highs, they are squeezing, meaning they are not becoming stronger, or they are not becoming profound as they were before. Meaning, if you can see this first high, this first wave, it was a little bit flawless compared to this one. This one's just a combination of both the sellers and the buyers, but here it was only the buyers. So this tells us a lot. So if you observe such a pattern, then your role as a trader, it is to wait for the pattern to be broken, and when that pattern is broken, that's how you're going to be executing your trade. But obviously you can add, as I said, an extra lot of confirmation. For an example, here we have our relative strength index, and you can see that it is already heading towards the area of overbought. So if it is around that area, we know that it is a very, very good time for us to execute a downward position. So once you observe the breakout and the RSI is already above, or if it can give you some kind of divergence, then it will be a clear enough confirmation that this is a right trade, or this is a good position for you to open. So I hope this is making sense. I'm just gonna keep it short and leave it here. Thank you guys for watching.